bring on board Kunal as well as Nooresh and find out what are the chartbusters that they're betting on and individual stock ideas as well. Kunal, let's start off with your chartbuster idea.
Well, Aisha, it's on Nifty, and the reason why we've been more on the neutral side on the index is because of the recent trends what the charts have shown. So this is the charts for the index on the intraday or on the hourly charts over the last 1.5 odd months. This is the June low for or the bottom made in the month of June for the index, which is around the 18,000 odd mark. From here we see that the index has been going through a classical uptrend, and a classical uptrend is best defined by using support trend lines, which in this case originates at current levels for the index trend. So as you can see that the index had taken multiple supports at this major trend support for the index. This is the third and the most recent one from where we bounced off on Monday session for the Nifty. What also matters on the other hand is this downward sloping trend line. So which means that in the larger scheme of a strong uptrend, we are going through a force of a downtrend on a minor downtrend, which is more of a corrective wave on the index. But the 19,300 mark, this becomes the most important point because this coincides with the previous support for the index, the multiple attempts which we've had at the 19,300 levels. We managed to break below those levels on an intraday basis, but then we've bounced off from that level. So which means on closing basis, this fulcrum point or this 90,300 mark becomes the most important level to watch out for. I think traders should ideally wait for a breakdown below this level because this could decisively mean that the index trends have reversed and we've broken the series of uptrend as well as the series of major support for the index. So that's the short-term view on index. 90,300, a very crucial support of zone for the Nifty.
All right, that's interesting. Data coming in on the frontline index, but let's get in your view then, Nooresh, as to what you're looking at on the charts.
So, looking at a small cap, Finolex Industries, the stock for the last few months was in a range of 160.65 on the lower end, 200 on the upper end roughly. It made a strong base between 135 to 160, also bottoming out done. Now the next base shifted to 160 to 200, gave a breakout, went to 210, made a flag formation, and we've broken above the flag also. So a classical trending stock now. Expecting a shorter term target price of 240 to 270, a stop loss to be placed at 200.
Right, and let's talk individual stocks. Kunal, what would you recommend?
IRFC is something which I would recommend as a buy. Stock is at 50 plus levels. Again, riding on high momentum. 56 as a target, stop loss at 47.5. And APL Apollo is something which I recommended on Monday. The stock is doing reasonably well, now trading about the 1600 levels. So would retrade a buy, 1700 as a target, stop loss at 1575.
All right, let's find out what Nooresh's stock-specific calls are. Nooresh?
So first is a buy in Indian Hotels, which has been in the range of 378, 380 on the downside, 405 on the upside. Reversing from the lower end of the range, stop loss at 377, target price of 405. Second is a buy on Care Ratings, which is a longer term breakout, a 3-year breakout in making, 740 stop loss, target 850.